We're going to pick up our conversation from last week with Phil here on the podcast, talking about some tax tips that you might want to look into this tax season, right here on Phil's Tax Hacks and Other Retirement Facts.
Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist, Phil Putney. Now let's get rolling with today's show.
Hey everybody, welcome into the podcast. Phil and I are back to pick up our conversation from this Fidelity article that we talked about last week. Tax Pitfalls, 8 places to look out for. And we'll share, of course, the link to this article in the show notes, so you can check that out as well. So Phil and I are going to pick up the next 4. It was 8 total. So we did 1 through 4. Now we're going to do 5 through 8. What's going on, my friend? How you doing this week? Still busy because you're one week closer to the deadline?
Doing good. Yeah, 1 week closer. So usually the last week actually is a little bit slower. We try to make it that way just because we're getting everything pushed in and the weeks leading up to make sure everything we have is done so that we can, have room for some stragglers that come at the end. So and not to be rushed. I hate to be up till midnight that last night. So not doing that stuff anymore. I used to do that years ago.
Well, that goes really well with my first one because we're dropping this around April 4th. So you have like a little over a week left, right?
Yep.
And it's waiting too long to strategize. So that kind of works very well, Phil, with what you were just saying. The sooner you can get this stuff to your CPA, the happier he or she will be.
And I mean, that's just from, preparing the return. But the thing that I think most people don't realize, and you know it, but you don't think about it, is that when you're doing the tax return, that's too late. This is reporting what happened, right? This is being a historian. That's all your CPA or your preparer is they're a historian. They're telling the IRS what happened last year. And there are a couple of minor exceptions of things that you can do now that'll affect last year, like your IRA contributions, Roth IRA contributions, SEP, those kind of things. You can do that up until the due date of the return. But I mean, beyond that, there's not a lot you can do after the fact, so to speak, to affect what took place that prior year. So that's where you need to have a plan going in, right? So the clients that we're working with on an investment and financial planning aspect, we're meeting in October doing strategy for the end of the year planning. So that once we're at this time, it's just reporting what happened and, are we on track to what we anticipated when we did our plan at the end of the year?
Yeah.
So,
well, when it comes to financial stuff, right, we often procrastinate. We all do it, right? We don't beat yourself up because we're all guilty of it. Unless you're in the industry like Phil, most of us are kind of straggling and waiting to the last second for lots of things. But you brought up an interesting point that many people don't realize is that you can last minute, and it's not ideal, but you can do a few things like adding money to the IRA or whatever to help, right?
Yeah. So there are a few contributions like that. HSA is another one, that are after.
And that reduces your taxable
fact, so to speak,
income.
up to April 15th. Right. Yeah. So there could be some things that you can do that would affect last year. If you're making especially from a tax standpoint, if you're making your financial decisions from a tax standpoint based on this year or next year, you're getting the wrong answer. You have to look at long term. What is your long game from a tax standpoint? Because it's a long game. It's not a short game.
Yeah.
You're going to get the wrong answer and set yourself up the wrong way. And I work with many, many retirees that have played that game all these years, deferring, putting in as much as they can in the IRA, saving, quote unquote, themselves taxes all these years. Now they're nearing retirement or in retirement, and they've accumulated this massive IRA, 401k, tax deferred money. And now it's time to pay the piper. So now we've got to how do we unwind that and minimize taxes long term? So.
Yeah, that's a good point. All right, let's go to number 6 here on the overall list, engaging in wash sale. When you talked on the prior podcast, you said we were going to talk more about the wash sale rules. Obviously, we just did the first 4, so we didn't get a chance to get into wash sale on that episode. So if you did check that out, then here comes your answer. So what is a wash sale, Phil, and how do you engage in wash sale rules and using these?
We talked in prior podcasts about the concept of tax loss harvesting, right? So you're trying to harvest some losses in your current investments to offset gains you had that year. It's a great idea, but a lot of times people don't want to get rid of that investment. Yeah, it's down, but you really still want it in your portfolio as part of the strategy. So you want to rebuy it. Well, that's where the wash sale comes into play. Is you've just got to be careful when you're harvesting losses like this, that if you do, and you end up repurchasing that same security or something quote unquote identical, right? So I
Okay.
mean, if you're buying a Vanguard S&P fund or selling that and then buy a Fidelity, well, the IRS is going to look at that and say, no, that's the same fund because it's an S&P fund, right?
Okay.
So
Okay.
that is the
Different company, different
same
wrapper,
quote
but it's the
unquote
same thing.
security. It's
Okay.
substantially identical is what it
Okay.
comes down to, right?
Okay.
Yeah, exactly. Different wrapper, same inside. So they're not going to allow that to happen. That's going to be a wash sale. So you've just unwound. And wash sales basically are saying that and what it comes down to, if you bought that identical security or
Hmm.
repurchased it, and this is where it gets interesting, 30 days prior or 30 days after. So you could quote unquote buy the new replacement security ahead of time, thinking that, well, it's not after, so I'm good. Well, no, the IRS already thought that one through.
They already thought it
It's
through.
the 60 days around the sale, right? 30 days before and after. If you buy a substantially identical security,
Hmm.
it basically disallows the loss you just recognized.
Okay. And it does have a little note here that says currently cryptocurrencies are not subject to the wash sale rules.
Yeah, so well, cryptocurrencies in general are just the custodians are not required to report it, right?
Hmm.
So number
Okay.
one, so it's up to you to report this. And interesting side note on that. So I think it's been 3 years now on your tax return. Now
Hmm.
there's a statement on there. You have to check the box that says, I have not engaged in any cryptocurrency
Oh,
sale and all these different things because they don't know. So they're wanting you to check the box,
yeah.
yes or no. And if you check it, you're signing that return under penalties of perjury. So just
Hmm.
remember, if you're checking that, you're on the honor system. And the reason they're doing that is because they're not getting that information. But to the point here, yes, the cryptocurrencies are not subject to the wash sale, which is a really interesting thing because, I mean, you know how volatile cryptocurrencies are.
Oh, yeah.
So you can,
Yeah.
and it's allowed, right? So I can Bitcoin, right? I can buy Bitcoin, sell it at a huge loss, recognize that loss
And then
immediately,
go
turn
buy
around and buy
Ethereum
it,
or something.
and buy Bitcoin again. I mean, I can sell it, huge loss, repurchase it because I really want back in. I'm not planning on getting out, but now
Yeah.
I bought it at 70, now it's down to 50. So I just lost, 20 on that share, that coin. Um, Rebuy it again, and under the normal stock rules, that loss would not be allowed because it's a wash. Under cryptocurrency, it doesn't matter. You can recognize that loss,
Hmm.
and it offset it against other stock sales. If you do trade crypto, there could be a way to generate some losses that you end up recognizing, and it doesn't
Interesting.
have to be a wash sale. So,
Yeah,
yep,
very interesting. That it's the Wild West in some of that area,
it
right?
is the absolute Wild West.
Yeah, wild. All right, number 7 here on our conversation: not taking advantage of tax breaks. What can a
Yep.
missing tax credit or deduction cost you? Possibly lots, right?
Yeah, so I mean, there's a lot of different tax credits. So child tax credit, so if you still have children in the home, make sure you're
Hmm.
picking up those. That's pretty standard. Most times,
Sure.
the software is going to pick those up for you. But education credits. I mean, this is a big one that comes up. And
Okay.
if you're have a child that's in school, in college, planning around that educational credit, who should be claiming the exemption? If the child, especially if they have a job, there could be some ways to work that exemption to where maybe you wouldn't qualify to get the credit because your income's too high. Well, maybe it might make sense to have the child claim their own exemption. Yeah, you're going to lose some exemption on yours, some credit, but then they could pick up a higher credit. So you just have to run the math to see who doesn't make sense, but don't miss out on these different tax breaks. There's a lot of little nuances like that out there. So
With the code changing right now that we're currently under the Tax Cuts and Jobs Act, Phil, anything from a charitable standpoint that could still fall into this line? Because I know it's kind of hard to obviously get itemized under the
yeah, I mean,
current tax law, but
unfortunately, that was something they did just during basically COVID for a couple of years where they gave an additional, effectively 300 per person. So 300 single, 600 married as a deduction in addition to your standard deduction. So,
mhm. And then, of course, finally, forgetting deadlines. Let's not forget the deadlines because, they're kind of important. And a lot of our people that we talk with, Phil, and that you certainly help, one of the big pieces that comes up under deadline conversation is probably going to be RMDs, right? Because of the tax implications there.
Right. Yeah, so, there's a lot of deadlines when it comes to taxes, unfortunately. The big one everyone knows is April 15th, right? You've got to file the tax return. The interesting point with that is, you can get an extension, but that's an extension of time to file, not to pay. So if you do owe money on that return, you have to pay that in with an extension. You can always pay it later, but now you're subject to penalties and interest.
Right.
And you combine the two of those together, it can be a pretty substantial percentage, upwards of 8 to 10% probably by the time, especially depending on how long it's filed late or paid late.
So if you owe them 10 grand, that could get out of control.
Right. Because the penalty, so the interest is a percentage, like an annual percentage rate, right? The penalty is a percentage by month, right? So if you're 0.5% a month. So, if you're 6 months late, now you're talking 3% in addition to the, just for those months, in addition to whatever your your interest is for the late payment too. So the combination can add up to a pretty significant number. So
I remember years ago, I was younger. I don't remember what it was. And I was in my 20s probably, and I got some sort of bill from them or something. And it said I owed them like $1 and some change or something like that. And I sent them the thing, but by the time they got it, I got another bill saying I still owed them like 29 cents or something like that from the time. And I found myself thinking, this is crazy. Like, okay, so by the time I get them the 29 cents, they're going to send me a third bill saying I owe them, 8 cents or something, So,
if you do file late like that and you have a balance due, then oftentimes the software is not going to have the math built in to calculate that into that tax payment. So you'll get a notice later on that says, oh, by the way, you owe an extra X amount of dollars.
Yeah.
Usually in those notices, though, it'll tell you, you have to pay it by such and such a date. And they've already calculated the interest in that. So it's almost like going to the bank and getting a payoff, on your mortgage or whatever.
Oh, okay.
They do the same thing. They figure the interest up and, through such and such a date, knowing that it's going to take some time to get that money to get
this was back in the
made,
90s and I was in my 20s. So I may have missed the date, or something like that. But either way, it was like, it was like small potatoes. It was like, I thought really like something less than $2. They really want me to pay them. They really want me, they're $2.
Yeah. It's hilarious. Some of them, I just was working with a client and they had a refund of $1, seriously, they're going to process. How much does it cost the IRS to
how much is it costing to sit? Yeah. Oh, Lordy, that's crazy. Well, there you go. So
talking deadlines, there's many deadlines in the IRS code you don't want to do, don't want to miss. And there's penalties. Deadlines means penalty, right? So if there's a deadline, don't miss it because there's an associated penalty with it. So
okay, all right. Well, bottom line, folks, tax mistakes happens, but the more you understand your financial situation and the tax rules, or work with someone who does, the less complicated your life can be. And I think we all really try super duper hard to have any complications or avoid issues when it comes to those jokers. At the IRS, right, which is theirs. I love that meme. It stands for
the IRS. Yeah, there you go. Theirs.
There you go. So if you got some questions, it's all theirs. If you got some questions, need some help, reach out to Phil or a qualified professional who can help you with the situation. Of course, Phil is a CPA and a personal financial specialist. So if you need some help, find him online at philstaxhacks.com. That's philstaxhacks.com. Get yourself onto the calendar for a consultation and a conversation about your retirement journey as well. Because obviously he's doing a lot of that for folks, not just the CPA side of things as well. So if you got some questions, reach out to a qualified pro, and don't forget to subscribe to us on Apple, Google, and YouTube. Phil, thanks for hanging out and breaking down these tax tips. I appreciate you.
Phil?
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.